Hello and welcome to the first trading day of this week. Here's what's coming up in the next 55 minutes. Data from the National Bureau of Statistics shows the number of metered customers dipped in the first quarter of 2024. And we see Kenya's cleared 257 billion shilling Eurobond. There's 3 days to deadline. And to the metals market now, see gold prices inch up as attention shifts to the U.S. inflation. Hello, welcome to the program. I'm Ladi Williams. First off, let's get a check on the markets. Now, we're seeing gold prices edging up today as U.S. Treasury yields ease, while investors, they're waiting inflation reading due later this week that could influence the Federal Reserve's interest rate trajectory. At this point, investors just want to know, when are they going to get the first rate cut in the U.S.? I guess they have to wait at this point. We see gold up 0.31%, $2,338 per ounce. Silver not shining as much, 0.10%, up $29.65 per ounce. And we see palladium, that's up big, 3.56%. At $957, still below that $1,000 psychological level. All right, let's go to the oil market now. See, oil prices firmed slightly today as traders weighed support from expected summer demand and geopolitical tensions against a strong dollar. We've seen the U.S. dollar, that's been rallying for a while now. And it makes oil more expensive, $85.60. That's what we have for Brent, 0.45% up this afternoon. WTI crude, that's trading at above $80 still, $81.07 a barrel. That's up 0.46%. So it's all about geopolitics now and oil demand. That's what's driving this market. I would see the National Bureau of Statistics says electricity distribution companies in Nigeria made a total customer numbers of Q1 that stood at 12.33 million from 12.12 million in the fourth quarter of 2023, showing an increase of 1.78%. On a year-on-year basis, customer numbers in the first quarter of 2024 rose by 9.47% from 11.27 million reported in the first quarter of 2023. Similarly, metered customers stood at 5.91 million in Q1 2024, indicating a growth of about 5.38% from 5.61 million recorded in the preceding quarter. See, revenue by discos, that rose by 17.91% compared to 247.33 billion recorded in the first quarter of 2023. The NBS also reports that for the first quarter of 2024, there was a decline in electricity supply in the period under review. And amidst the exit of multinationals in Nigeria, search engine Google says it is here to stay. Country Director for West Africa, Google, Olumide Balogun, who was a guest on Business Morning, says that's why the company seeks to empower small businesses in various sectors of the economy. Take a listen.
A global challenge. I think globally we do see that there's a shift kind of like in the economics, there's a shift in purchasing power, and we're really here for the long term. As we are in many emerging countries in the world that are a little bit ahead of where we are as an African continent or as Nigeria as a country. And what we do is we're able to take learnings from how we've managed, I think, tepid and difficult periods and apply them back home here. And for us, it's really about how do we invest and how do we make the ecosystem competitive. I mean, who would have thought many years ago that you'd have 6 unicorns, I think is what we have right now, here in Nigeria. And we really believe and have the confidence that we will see many more as long as we're able to stick to it and continue to invest and support businesses to grow with the power of technology. I think that at the end of the day, we have to invest and we have to accelerate out of where we are now. And that's really about how we develop the ecosystem. And we think AI and technology at large could play a really important role in that.
All right, now to our first conversation. Improving ease of doing business in Nigeria is still top on the agenda as Nigeria looks for a lasting solution to its myriad of economic challenges over the years. Well, joining us now for this conversation is Mr. Collins Nwebu, who is the President, Harvard Business School Association of Nigeria, and Chairman, Signal Alliance Technology Holdings. Joining me right here in the studio. It's great to have you.
Thank you very much.
So, quite interesting times. We're seeing every country trying to beat inflation at this time. We're seeing countries like the US, the UK, they seem to win that battle, at this time, getting closer to their 2% target. But we're still far off from our targets at this time. So, we've seen the central bank raise interest rates by over 600 basis points this year already. So, it's a high interest rate economy, at this time. I'd like to know how your members are navigating this cost of credit. It's really expensive borrowing at this time.
Yeah, it's expensive borrowing at this time, and it affects everybody, whether you're an individual who shops or a company that wants to borrow money. But the CBN thinks that you need to raise interest rate to fight inflation. And that seems to be the global standard for fighting inflation. So they had to raise this. I understand them raising it. I think the more important thing will be how much they raise it and being able to mitigate the effect on businesses. Because as a business today, your costs go high once the cost of borrowing goes high. So who is going to pay for that? Ultimately, pass it down to the consumer. The consumer is suffering from inflation, they're suffering from your FS rate, they're suffering from everything that goes high. Ultimately goes to the consumer. So how do we make sure that the consumers don't feel the effect of all these things? Because if I'm doing something, if I want to borrow money to do a business today, and I'll add the cost of borrowing, and then I pass on the cost to the ultimate consumer.
Right, and on one hand, we're trying to tame inflation. We're making cost of borrowing high, but at the end of the day, this business is still passing on that high cost to the customers, still keeping inflation high. So definitely, I know it's a tough job, being a central banker, at this time. But how do you think they can, measure this? So somehow you're not destroying growth.
You're not destroying growth.
Too much.
We also need to grow.
Yeah, we need to grow.
I think it's a tough balancing act, but I think most countries, what we need to know as business is saying, look, this is going to be a temporary thing. So you need to raise interest rate for a point. At some point, and maybe inflation will go down, and then ultimately the interest rate will start falling. I think that's what the US and COA have done. How long do we have to go for this? I think businesses need to understand how long do you think this is going to last so that they can plan around it. I think part of the problem we have in the economy right now is that there's too much uncertainty. There's uncertainty around Forex, there's uncertainty around this interest rate, there's uncertainty around a lot of things that are happening in the economy. And most people are just feeling the pinch of this uncertainty. Once there's a bit of stability around things like FX, and then you reduce the inflation a bit, I think things will get a bit more certain for people. It will not solve the problem. It will not solve the pain. At least people need to plan a little better.
But in your opinion, how resilient do you think businesses in Nigeria are, at this time, managing this high inflationary environment, high interest rate, and we're also seeing demand destruction?
Look, there's a consequence to every reform. What you need to do is to reduce the negative consequences. We're just going through a lot of reforms at a very fast pace, and each of them has consequences. And I think that I don't know whether it's sequencing or execution. The negative effects have come too fast and too furious. And then whether you're a company or an individual, everybody is feeling it. This is not the first time we've had reforms. Obasanjo did reforms on telecoms, he did reforms on pension, he did reform on the health management system. And those things, we've seen the good effect of them over years. So reforms are not bad in themselves, but I think sequencing those reforms to make sure that the pains, you understand that the pains will come, and then learn how to manage those pains. I think that's the most important thing. Right now, people need to understand that the government is there for them to mitigate these pains. Companies need to understand the same thing. So I'm sure that I hope that there are programs to mitigate the cost for companies, because you don't want the companies to die. A lot of companies are dying because of this. Some companies are leaving Nigeria because of the uncertainty and the cost structure for the business. And you don't want that to be the narrative for your reforms.
Right, and someone I spoke to earlier did say this is somewhat a global, phenomenon. Right now, we're seeing companies leaving one place to another, trying to get a more business-friendly, environment. And you did mention the multinationals, the exodus, of the multinationals. At this time, we've seen over 6 actually leave in just the first half of 2024 right now. But leaving is one thing, filling the gap is another thing. Do you think Nigerian businesses or business owners can somehow, get into the shoes of these companies that are leaving at this time?
Now, some of these companies leaving are globally quoted companies, and these days shareholders are very impatient. If you're a CEO of an international company today, you can't come to them and tell them that, look, we're losing money because we're in Nigeria and we have the patient with Nigeria. But your shareholders will not accept that. So some of them will make some decisions, sometimes that will not favor you when things are down. But if things get better tomorrow, they'll come back, obviously. The companies that are taking over from them sometimes don't have the same kind of pressure. Some do, some don't have the same kind of pressure. So there will always be somebody who, when you leave, another person fills the gap. So I think that some of them, the gap will be filled. But if a company leaves, their whole value chain in Nigeria gets disrupted at that point. The new people that take over, it took a while for these new companies to create their own value system, their value chains, and then make sure that the partners, for instance, the partners that were doing business with this, the consumers that were consuming their products, settle down over time. So my company is a partner to one of the companies that has left, or partially left.
Right.
And
so this will impact B2B.
Definitely. It has some effect. First of all, the company was growing in Nigeria, okay, and the part leaving now is a sign that there was growth. And if they leave, it indicates to a lot of their entire audience in the world that this is not a good place for you to go because it's not a growth market. And everybody wants the economy to be a growth market so that the right kind of people will come. Whoever replaces these guys, okay, but those people could also have come and then this will stay. And then you have a bigger economy. We just need to grow the economy and make it comfortable for everybody. Not that some people have to leave before that can come in. That's not the right.
Right, because exits are fine, but we don't want exits completely, out of the market at this time. All right, talk to me about how you feel the government can handle this situation in the short term, because I'd like to, get your feel on hope, at this point. Seeing the body language, of this government, so far. Do you see light at the end of the tunnel when it comes to the Nigerian economy?
I think at some point the economy will be okay. I think the most important is to make sure that it's a shorter time than what you normally take, so that people can have hope and recover. The government also has to show sign that they understand what the people are feeling. Sometimes the body language is important. As of today, my company has suffered from FX, we're suffering from inflation, we're suffering from all this stuff. The government is a shareholder of my company. When you pay corporate income tax, it means that government takes a part of your earnings. And normally your earnings are owned by shareholders. So government is a shareholder in every company.
Talking about company income tax, we've seen that drop in the first quarter of 2024.
Why will it not drop? If I made FX losses, for instance, in last year, it will eventually affect my profit. And that profit I share with government. So if my own falls, government will fall. Government cannot expect that at this point. Actually, government should make a provision that this is going to happen. Because companies like MTN, look at the kind of losses they are declaring. How much tax are they going to pay? They're not going to pay a lot of taxes. So we have to take this as part of the consequence of the reforms. And government is a shareholder in our company, so they should take part of the heat.
Right.
But I think that ultimately, I would love to see government has a plan to reform taxes. You have to reform those taxes. You cannot keep beating the same time. I think I would like to see reform in taxes. They set up a group, a committee to reform taxes. I think they finished their work. Government has to move forward with whatever they recommended and quickly reform the tax system so that the burden will be less on everybody. And they can increase the tax bracket, and then maybe the money will start increase, their income will start increasing over time. But right now, it will be unfair for government to think that we are suffering and they have to tax us more. That's not going to work.
Because it'd be nice, seeing the likes of, Tesla, Nvidia, see how many billions they pay, in company income tax, and the government, smiles to the bank. But they need to make that
we have to make the money
enabling
first.
environment.
Yes.
These companies have to be profitable, going forward. So,
yes.
Looking at 2024 so far, first half is technically over. At this time, do you see any kind of soft landing, for the Nigerian economy in 2024?
I'm not a soothsayer,
right?
So I can't really say. I had thought when the reform started last year that by the second half of this year we'll start seeing some level of stability. I think the most important is to get to the point where we feel we're at the bottom and we can only come out. Okay? Because as a business person, you need to know that at this point we've seen the worst, so that we can now start coming out of. It's not as if things will not just get better, but that you've seen the worst and gradually you come out of it. I think we have to get to the point where we see that things have stabilized and then we start getting out of it. I hope that happens this year. I thought it would happen, but at this point, we just need to see that it happens.
Right.
The earlier that happens, the better for everybody.
The better for everyone, definitely. It was great having your perspective, Ms. Collins Onwuegbu, President, Harvard Business School Association of Nigeria. Thank you so much for coming on the show today.
Thanks, Larry.
All right, so we'll take a break now. When we come back, we're going to head straight to the markets for the first trading day of this week. Do stay with us. All right, let's head straight to the markets now. We have Willie Bonga with the details. Great to have you, Will.
Hi, laddie.
Last trading week.
It's the last one.
And I'm wondering what June has been like, so far in most of these markets. We know the tech stocks have done really well. In the U.S., we've seen the likes of Nvidia, hit new highs, at this point. But we're seeing the NGX still struggling, trying to get back above that 100,000 level.
Yes, it's been a struggle for the NGX. It's more like they're having a recovery, but right now we don't even know if they can sustain that recovery because we see them pulling back at the moment where you actually think that they're going to hit another, maybe like move on another level up. You see them, getting maybe past the resistance level, then they pull back again. So we don't know what's really happening, especially with the bank recapitalization taking place. Stocks plummeting, especially for some banking stocks, but we've seen some of them doing really well, like Fidelity Bank has really done outshone itself and all that.
I'm going to look at this market as, glass half full, at this point, because it's quite incredible to even be at 100,000 points.
Yes, it's quite incredible, but right now, we want to know if we can still hold on to that.
Investors just want too much at this point.
So we're just going to kick off, as always, with major equities in Africa, where sentiments were mostly negative at intraday. We saw Nigeria's NGX down at intraday by 0.12%. That's at the time I checked. And that was 99,625 points. South Africa also was positive at intraday. However, we saw it's trading really well there. It was up at intraday. The numbers are not doing so well on the screen there. Now, elsewhere, we see Egypt's EGX 30 was negative. However, at intraday, it was 0.05% down. And that trend, we'll see if that would persist till the end of the close of trade. Now, also, Kenya's stock market closed Friday down, negative session there, 1.54%. We'll see if they will have a rebound at the close of trade. Well, let's check in on activities at the NGX. So we want to know if we can sustain. This is the first trading day and it's negative. For joining us to share his insights as to why this is happening and to see how this will, if this will persist for the rest of the week, is Ambrose Omodion, Chief Research Officer, Invest Data Consulting. Good afternoon, Ambrose. Good to have you on the program.
Having me. Good afternoon, too.
Ambrose, let me just ask you in your words, can the NGX recovery continue or is it tired?
Yeah, actually, I would say that it's a trend that in the month of June has been always a negative month for the market, or you can say a weak month for NGX. I'm not surprised that we are seeing a kind of a correction or pullback that is heavy. The pullback we have seen so far in June should not panic any serious investor or trader. They expected that this month we expect to see this oscillation. And also, if you look at year to date, we have also a mixed market on a monthly basis. I mean, for me, the month of June is just preparing investors to take the right position for the second half of the year. Knowing that we are seeing profit taking and bargain hunting, taking advantage of pullback price while some are selling down. It is that people have different objectives in the market. For me, this pullback was seen should not send people. But I say that it's a heavy pullback or a heavy correction. There's no panic at all. The second half of the year, starting with any season, will give investors a new direction where the market is going. Coupled with what the government reform, sense of economy, that sees stability in our FS and others that also strengthen the market. But I believe that second half, we're going to see a better market than what we have seen in the last Q2, not with the last Q2. Yeah.
Okay, looking at the intraday trading there, what stocks are actually moving the market? Because we've seen it down more than 0.12% or about 0.12% at intraday. What stocks are actually driving this negative sentiment?
Actually, at the beginning of the market today, we saw a positive opening, seeing the life of Julius Berger hitting a new high, and others, Vectors Capital and others, going the northward. But during the midday trading, we saw also profit taking and sort of correction. For me, like I said earlier, there's no cause for alarm because we are seeing also that this blue chips company that people are taking profit are those that I think that they are not likely to pay trade dividend. People are moving out of some soft position for what because every investor in any market is there to make money. It's now possibly a shuffling or sector rotation will continue, especially as we're going to see what we call end of the quarter or end of the half year we're addressing that will come up this week. Going to roll your portfolio against what the new second half of the year. For me, what I see is part of market dynamics. And for me, I believe that those changing fundamentals that will drive the market in the second half are already pointing out where they are going. For investors, they should now look at where am I standing? Am I in the market for the medium or long term, or am I a trader? For traders, that we're already seeing improved volume in the market. To say that yes, we are seeing funds coming back to the market that also ahead of interim dividend in the second half. I believe that this is that will drive the market for traders, while for investors, because market is pulling back, we are buying those stocks at a good price, and this we are buying into value. That means I also expect to see the second half of the year, we're going to see a better position for yourself ahead. I believe that every investment is against the future. For that, whatever we're seeing today, going to position possible against tomorrow. I believe that investors also do not panic when you are seeing market correction because it's part of market dynamics anytime, any day.
Okay, looking at some stocks that we've seen some dividends, still seeing dividends trickling from some stocks, and we do expect some in the second half of the year. But where do you see dividend payments, especially with inflation going as high as we're hitting 33.95? Where do you see companies able to make profits in the second half of this year, and would they be able to sustain the dividend payments that we've been seeing?
Actually, for me, I believe that in any environment, whether inflation is high or low, there are some sectors or industry that will benefit from it. Why did I say so? We expect that, if government and labor will agree going to the second half and they agree to pay either 70 or 100, when they reach agreement. Yes, every market analyst, every investor that there will be inflation immediately after this payment is agreed on. Fine, but it won't last because already we are seeing that this cost push we are seeing in our economy. It's not much of liquidity push, no matter how CBN will put it. Yes, also we have seen like 3 months now, we are seeing kind of a slowdown on month-on-month basis in inflation, and while the year-on-year remain at the peak. But I believe that as they are agreeing, there will be a lot of liquidity that will come out. That liquidity that those that are buying only just a bag of rice or half bag before will not go for food. Those that are buying only 2 make will go for 3 make or 4 make. Automatically, those who start living share of those companies also will produce more. Knowing that some of these goods are essential, even when they increase in price, we're still going to see what petrol, because then they have also increased. Let me call it purchasing power of the public in terms of the increase in wage. That has the work problem in the market. Those companies that has the strength or the kind of elastic demand that can push to their price, they're going to pay a better number. When they post a better number, they're going to pay a better dividend. That also will make their price acquisition and dividend. Automatically, you are earning above inflation. For those that it will hit more is that if inflation rally more, those that are having fixed income, no matter how big it is, if inflation moves, they don't have to remain in red. Already they are in red. But for those that are in equity, with capital appreciation and that dividend coming, you are more better than those. That's why it must at times as investor know what we are in, not to put your portfolio for those companies that have that potential to move with the inflation and see how you can also don't forget that the inflation we have seen so far in Nigeria, I'll tell them that it's structural issues. It's not about only liquidity in the system. That means if also the physical authority can also come in, that the security, going back to one, things will improve going to the future. But I believe that those changing fundamentals for second half of the year was on the dynamic was to give investors opportunity to position in good sectors and good companies that will create wealth for them.
Okay, Ambrose, what are your stock picks this week? This is the last trading week in the month of June, and we want to kickstart the July, that's the second half, on a good note, a good footing. So what stocks should investors be looking at the moment?
Actually, I will not do stock pick on the air, but I believe that investors should know what we call the NGS up market and NGS weak market. That will help them to know the month that we're going to see an NGS up market. For me, in Nigeria, we know that the month of February, the month of January, April, May, June, May, October, July, November, and December are the up months on the board. Why the weak months are March, June, September, and August. That means now we are going into the month of July. I've told them already what to do, because I said these are the up months. The up months are January, February, March, May, October, July, November, December. Why the weak months are what? March, June, September, August. But out of this, we have what we call the 3 best months on the NGS, which are January, December, and April. Why the worst month on NGS are what? June, August, September. Now, we tell you that, for me, I tell you that what we are seeing in June, this week, I'm not surprised, because we know how the month of June has ended for, with our research, how many times in the last almost 25 years. For me, I'm not surprised seeing June closing the red, but the month of July will be better than June. That's why I say, let me open up to tell them, these are the up months and the weak months that they should know how to manage their portfolio.
Thank you very much, Ambrose Omodian, Chief Research Officer, Invest Data Consulting. So we now know the month where investors can actually key in and make the most profits, take positions in the equities market. Thank you so much it's always good to have you on the program.
Thanks for having me.
So move on to other markets now. In the Middle East, we see that the Gulf stocks were trading mostly positive at intraday. Abu Dhabi index was up 0.02%. We see Dubai down at intraday 0.54%, and this because of the blue chip developer MR Properties dropped 1.5%, and Dubai Islamic Bank also slid 1%. Now, still within the region, Saudi was up 0.3% at intraday. The region, it was lifted by gains in finance and industry stocks. Qatar was also up 0.21%, and this was helped by gains in most of the sectors. Now, let's look at the US and see where stock futures were actually mixed on Monday, but we're seeing that 0.2% up for the Dow Jones, and we see S&P 500 0.05% up. NASDAQ was down 0.14%. S&P is nearing a record high. We're seeing that movement. This by the close of the week, it's nearing a record high. That's a very strong one, especially now that Nvidia is coming down. But Nvidia has seen this back-to-back sell-offs. It's not really helping that index for a while, especially NASDAQ. The index there is not really helping since Nvidia, especially since Nvidia overtook Microsoft, overtook Apple as the best performing stock in the world, most value stock in the world. We've seen the investors taking profit. It fell about 4% last week, after 2 consecutive declines there. So let's look quickly to Asia and see how the markets performed. For today, they closed the markets, but mostly in the red as investors await inflation data from Australia and Japan, which is coming on later this week. We see the Nikkei in Japan up 0.1%, and this is very good for that region, still at 38,000 points. Kospi in South Korea, however, is down 0.7%, and we see the Hang Seng Index in China also flat, trading flat at the close of the bell. Shanghai in mainland China was down massively, more than 1%, and is still at 2,963 points. S&P ASX in Australia is also down 0.8%, and with knowing that the Reserve Bank of Australia is thinking of holding interest rates or cutting interest rates, they were just waiting to see how inflation data will play out. When they receive that inflation data, that will be a discussion if they're going to hike rates or not. But sentiment is showing that they might hike rates because of the last meeting. It was discussed there that they would probably be hiking rates. But, inflation is going up. And Glady, I just want to say that most countries, most central banks in every country is thinking of either dropping rates. You see in the UK that inflation dropped to the 2% target.
Right.
We see US inflation also tapering.
So investors are like, you have your target now.
Yes.
Is it
time to cut the rate?
But by the end of the day, the central banks don't want to cut too soon.
No.
Because if you cut too early, then you're going to have inflation rising all over again, and maybe at a faster pace. But
they're really operating with caution, so that's what we're seeing them doing.
Thank you so much, Will, for the details there for our local markets and most of the global markets that we track at this time. Let's take it on to the UK now. Juliana joins us from our London studio. Great to have you, Juliana. So we have data out there in the UK, and definitely with all the rate hikes, everyone's just keeping an eye on the jobs market at this time. And see in the UK, the job market flatlined in May, but this is despite GDP growing by about 0.7%. How's this data being digested over in the UK?
Good afternoon, Laddie. Yeah, you're absolutely right. The labour market has been a focal point for analysis from the Bank of England, as well as, of course, the Prime Minister, Rishi Sunak, who is obviously locked in a general election campaign at the moment. So this isn't the typical labour market data, shall I call it the official labour market data that we usually get from the Office for National Statistics. But this data, having a look at the UK labour market, has been released by Adzuna, which is a recruitment site looking at the labour market in the UK. And they have shown that in the month of May, just quite rightly what you were saying, is that the labour market has flatlined, basically meaning there is no longer growth in the labour market in the UK in terms of vacancies that are available. Now, this could potentially be good news for the Bank of England, because even though, as Will was just saying before you crossed over to me, we have finally hit that benchmark rate for inflation, which is at 2%. And one of the reasons why interest rates have been high at 5.25% is to try and bring down inflation. But the Bank of England Governor, Andrew Bailey, has always insisted that until the labour market is finally under control, they won't be able to bring down interest rates just yet because of wage growth. So potentially this could be or lead to the data that will finally see borrowing costs come down in the UK. But then also, more importantly, having a look at the labour market, it is really important for these vacancies to be filled. I think at the moment we've got about 850,000 unfilled vacancies. So anyone watching from the UK, or anybody who has any family in the UK, if they're not working, they should be, because it's a brilliant time to get a job, particularly among areas such as travel, teaching, manufacturing. They are all on the rise. And of course, we know that one of the reasons why we've had so many people striking in this country over the past few months is because they're taking on too much work. Those are the conditions that have led to industrial action. So really interesting data, which I'm sure analysts across the country are chewing over.
Right. Well, you heard it from Juliana. If you're in the UK and you're not working, get to work right now. All right, so Juliana, it's a brand new week. What market moving data should we be expecting?
It's a brand new week, Laddie. Apart from the fact that you'll be hearing lots about the heat wave, we're going to have a heat wave in this country over the next couple of days. I'm very much looking forward to that. But then also, as I said, we're bang in the middle. Well, in fact, we're not in the middle. We're at the far end of the UK general election campaign. Brits head to the polls on Thursday, the 4th of July, to vote for their next Prime Minister. If you have a look at the polls, you open up any newspaper, clearly the Labour Party and Sir Keir Starmer are tipped to win. So they're, of course, across the country at the moment trying to spell out details of the manifesto. Of course, they've been accused by the Conservatives of pledging all of these economic measures that they're basically going to be unable to fund. That's the accusation from Jeremy Hunt, the Chancellor. But then also a really big story. It's just been an absolutely abysmal general election campaign for Prime Minister Rishi Sunak. In fact, some would say this is the worst general election campaign in history of any comparable nation. That's how bad it is. So this week, the scandal, of course, is the Tory betting scandal. So the Prime Minister, Rishi Sunak, is currently in Edinburgh helping the Scottish Conservatives launch their manifesto. But nobody wants to talk about the manifesto. Everybody wants to talk about this Tory betting scandal, because a fourth Conservative official has now reportedly been taken in for investigation by the Gambling Commission, because what they were doing, or what they're accused of doing, is betting on the date of the general election. So many of us, including myself, anybody close to Downing Street, would have heard about the election date a couple of hours before it was announced. I was quite shocked to get that announcement, actually, via WhatsApp. But then, those who wanted to break the rules were taking that information to the bookies and betting, and apparently dozens of bets had been placed with winnings worth thousands of pounds. Not great. And this story is growing legs, and it could involve some more people. So not great. And apart from that, Laddie, I know we're running out of time. We've also got revised GDP data coming out on Friday, basically looking at the first quarter GDP. We know that we finally got ourselves, UK, out of a shallow recession from the end of 2023. So we're going to look at the data to make sure that in Q1, GDP did actually rise by 0.6% as claimed.
Right, so much data to actually look out for at this time. But how are the markets looking at intraday in the UK?
Pretty good, tip-top shape. Starting off the week, blazing hot wheat in the UK in the green. The all shares up 0.36%. The FTSE 100, the blue chip, that's up 0.39%. And the FTSE 250, the domestic market, Laddie, that's up by 0.27%. In the currencies market, the British pound is currently trading up against the US dollar by 0.19%, though down against the euro by 0.08% and down against the Japanese yen at intraday by 0.05%.
All right, pound looking stronger. Thank you so much, Juliana. Thank you. All right, now let's take it on to Europe now. See, the German economy minister, Robert Habeck, was in China over the weekend to hold talks with Chinese officials about EU tariffs on electric vehicles. Well, DW correspondent Chiponda Chimbelu joins us now for more. Great to have you, Chip. So what was the goal of this trip?
Thanks for having me. Well, Laddie, Germany's economy minister Robert Habeck was in China to prevent trade tensions from worsening. On June 12, the EU announced provisional tariffs targeting electric vehicles made in China. And as the home of Europe's biggest auto industry, Germany stands to lose more than other EU countries if Beijing retaliates with similar measures. And that is why Germany's economy minister and vice chancellor Robert Habeck is now the highest-ranked European official to visit Beijing since tariffs were announced. Habeck said the EU tariffs on Chinese EVs aren't punitive, but an attempt to level the playing field. He noted that Brussels isn't targeting specific companies or blocking market access for entire industries, as is the case in other markets, including the US. The aim of Habeck's trip was to show that there is readiness to hold talks to prevent an escalation of trade tensions. The provisional tariffs will be effective from July 4th. The EU and Beijing plan to hold talks before the tariff's final entry into force in November.
And how did Beijing respond?
Well, before we get into that, it is worth noting that unexpected meeting between Economy Minister Habeck and Chinese Premier Li Qiang was cancelled, and the reasons for that are still unclear. However, Habeck got to meet with his Chinese counterpart, Chinese Commerce Minister Wang Wantao. Wang remained critical and said the EU tariffs are an attempt to suppress China's industrial development and that economic collaboration shouldn't be weaponized. He said that Beijing will do what it needs to do to protect the interests of its car makers. China believes the tariffs will hurt European consumers and also the development of the bloc's auto market. And that is, of course, something that Germany agrees with. The hope in China is that Berlin can use its influence in Europe while Beijing negotiates with Brussels in the coming months. The German economy minister's trip to China has shown that Berlin is against the tariffs that the EU has imposed on Chinese-made electric vehicles. And it has also shown that Beijing has a powerful friend in the EU when it comes to negotiating with Brussels on the tariffs on Chinese EVs.
All right, what are we expecting for the markets in Europe?
Well, Laddie, European stocks are expected to be little changed today. Investors are anxious about the upcoming first round of elections in France on Sunday. there are some concerns about what a change in the French parliament could mean for the country's economy. The right-wing RN, which is leading in the polls, doesn't have any government experience. But investors will also have to wait another week for the second round of the French parliamentary elections on July 7 to get the full picture of the results. So it's about 2 weeks of uncertainty regarding the political and economic future of France, which is the EU's second biggest economy. Not much is expected in terms of data today, so the highlight here in Europe is Germany's Ifo business climate.
All right, thank you so much, Chipona Jibilu, giving us details right there in Europe. Thank you. All right, now let's take a conversation further now as the federal government celebrates recording a commercial transaction of raw gold sales at the London Bullion Market Association. It's coming at a time we see global central bankers buying gold in an effort to diversify foreign reserves. Well, joining us now for this conversation is Ababoye Olaolu, who's a sub-Saharan African economist at Cardinal Stone. Great to have you on the show.
Yeah, hi, good afternoon, and thank you for having me.
Good afternoon. So we've seen the likes of China, the central bank, going on a gold buying spree. We've seen other top central bankers also do the same. That's raised the price of gold. I remember reporting gold at about $1,600 per ounce, but now we're trading about $2,300 per ounce. But let's look at Nigeria's debt level, and we're trying to get our reserves up. At this time, how much can this gold purchase program help?
Okay, so first, it's an interesting initiative that government is doing everything possible to support the currency, support the FX reserve, and this is coming also from the government's gold programs that have been saying, right? In the last few months, based on the updated records that we have, the sales from this gold have technically added about $5 billion to the FX reserve. Why this is still clearly small, we think that the effort of the government to liaise with small-scale gold producers and then to export it to developed markets is clearly a good one, right? So when we see the program fully crystallized, and then we see material improvements in dollar inflow from those gold sales, right? We expect that to materially impact the FX reserve. But for now, it's still at the infant stage, and we think we should just watch and observe.
Right, we're definitely watching and observing them. I'm sure Nigerians are just looking for ways to get the Naira stronger, at this time. Talk to me about the potential of this gold purchase program actually giving some strength to the Naira.
Yeah, so clearly, the Naira is a function of what do we have in our reserves, how strong is our reserve level, is the CBN able to intervene in the market, are they able to remove market distortion? Clearly, once the market sees that there's adequate dollar in the economy, there is enough supply coming from the CBN and non-CBN groups, what you begin to see is positive pass-through to Naira. Naira will strengthen. I'll give you a very practical example. In 2017, April, when the former IRD window was created, that led to a material confidence in the market. It led to foreign investors coming to the market, and there was adequate dollar liquidity in the economy. So the gold program is clearly a fantastic one. We barely scratched the level. If you go to some southwest states here in Nigeria where gold is being gotten, compared to what we've done so far, there's still a large reserve of gold right in the country. So we see continued exploration of that gold, right? We're likely to see the country gain enough dollars for it. But there's still a lot of work to be done. You still need to liaise with the miners. You still need to put policies in place, a whole lot of things. But then it's good that the government has started something.
Right, and we're seeing in Zimbabwe, they did launch the ZIG, definitely there to help with their currency, and that was gold-backed, at this time. So it seems everybody is running back to gold, at this time. But I want to get your perspective now for the Naira. Do you see the Naira actually getting some kind of strength in the second half of 2024?
So the thing is this. First, we like the fact that the CBN has intensified stabilizing the Naira over the last few months, right? We've seen Naira pushed around 1,005 levels. From our own point of view, we think that Naira will most likely remain stable, right? Because there's still a lot of both upside and downside risks. For example, when we get to August, you expect to see a lot of dollar demand, especially for international students who are abroad, be it for their school fees. Aside from that, genuine demand will still prevalent in the markets from people who want to do genuine importation and to run their business activities. Likewise, we still have speculators in the markets, right? You cannot entirely remove those guys from the market. Despite the effort of the CBN, they're still there. So all these factors are still there. So for us, I would think that at current levels looks to be like the fair value of Naira when we check through different dollar valuations. It shows that 1415 level looks like the new level for the Naira. So we think that Naira will be relatively stable.
Right, and for me, I guess my fair value or my dream value of the Naira, I'll say about 300. Hopefully that happens sometime. Thank you so much. It was great having you, Boboye Olaolu. He's a Sub-Saharan Africa economist at Cardinal Stone. Thank you so much.
Thank you for having me.
All right, talking about sell-offs at this point, let's take a look at what's happening with Bitcoin. We're seeing a massive drop there to about $61,000. And let's look at the sentiments in the market right now. Still around neutral. That's talking about how investors are feeling, the crypto market at this time. But it's getting lower, 49 points over 100, neutral at this point. So it's looking like fear might be creeping in at this point in the crypto market, going by the fear greed index at this point. Let's look at the top cryptocurrencies we track now. We see Bitcoin, $61,359, big 4.55% drop today. Ethereum's not left out, $3,313. And we're seeing big drops, 4.25% for Cardano at 37 cents, XRP 47 cents. XRP has behaved like a stable coin for the longest time. So not much to see there when it comes to Ripple, but we see the XRP army, they're looking quite optimistic about price action there for XRP. Let's bring in Shehu Dania now. He's the CEO, Alpha Geek Technologies, joining me via Zoom. Great to have you on the show.
Hi, good afternoon, Ladi. It's a pleasure to be here.
Right, so we're seeing this sell-off in the market now. The miners, the Bitcoin miners are being pointed out at this time. And it looks like they're not done selling Bitcoin post-halving. How are you seeing it?
So generally, when the market sentiments are this way, after every halving event, the miners' fees are cut down into half. And they need to make, funds available for their operations to keep going. So the best result they get is, to sell off some Bitcoin in order to be able to manage, their transactions. If you noticed, at the first week after the halving, the transaction fees on Bitcoin was ridiculously high. That was because the miners were, struggling to ensure that, they make some profits, to be able to keep their operations up, happening. Also, it's also good for them to also see that they are able to sell off at the point where they know that the market conditions are still high. And then evidently, everybody believes in Bitcoin so much, and they will always buy back at the bottom.
Right, and definitely we know the bottom buyers like to come in when they see big drops like this. But where do you see short-term bottom, for Bitcoin, and will that $60,000 level hold?
It's very difficult to say, but some things that we know for sure, right? I know that we have seen, the Bitcoin dominance is still there in terms of, the cryptocurrency space. Bitcoin still holds, significant dominance. We're also seeing that there's growth in the NFT, DeFi, altcoin sector. And then we've also seen mass adoptions from institutions. So meaning that as, the prices dip a little bit this period, we'll have a lot of institutional investors who will also be willing to come in, buy in. So I think anything below 60 might just be okay, but the tendencies that we'll see very, very low right now are very, very slim because, if we look around the world, the regulatory landscape, a lot of countries are also beginning to develop regulation for, cryptocurrencies. If you look even in our very own Nigeria, the SEC has developed a framework, for licensing virtual asset service providers and whatnot. So that also increases adoption. These are a lot of people have direct access to buy into Bitcoin and cryptocurrency generally. But of course, since Bitcoin is number one, most people would always still buy Bitcoin. However,
All right.
there's some security challenges, but those are negligible.
All right, we'll keep tracking to see if there's more pain, at this time for Bitcoin.
Yes, no pain, no gain.
No pain, no gain.
Always be pain.
Exactly. Thank you so much, Shehu Dania. Thank you.
You're welcome. Have a great day.
All right, let's get some top stories now. We see Kenya, they've cleared the remaining $556.97 million. That's about 71.5 billion shillings of the $2 billion Eurobond. That was due by today, 24th of June. Figures by the National Treasury's Public Debt Management Office indicates that the outstanding note was settled, that was last week Friday, June 21st, about 3 days ahead of the maturity date. Then to North Africa now, we see the World Bank has announced a $700 million budget support for Egypt as part of a 3-year, $6 billion program the bank pledged earlier this year. The $700 million is designed to help Egypt boost private sector participation, macroeconomic and fiscal resilience, and a greener growth trajectory. All right, so that's the show today. Thank you so much for watching. We're still going to keep tracking the last trading week in the month of June. Let's see if we're going to get green closes all over. Thank you for watching. You can watch this again on our YouTube channel. Just flip over to YouTube, search for Channels TV. You can also visit our website, channelstv.com, for more updates. I'm Ladi Williams from the team right here at Channels HQ. It's bye for now.